Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 18th of July, 2022. And we're going to begin a series of very short videos or podcasts talking about what's going on in the banking and finance sector, as well as gold and silver. Why? Because they're all interlinked. These will be short videos and generally reading from major newspapers or online news media such as Reuters or Bloomberg or a host of others. As they appear, we shall share them with you. An interesting one published, in fact, just a few days ago on July the 14th was this. JP Morgan suspend buybacks, warns on global economy as profits slump. JP Morgan Chase & Co.'s Jamie Dimon struck a cautious note on the global economy as America's largest bank reported a worse than expected 28% fall in quarterly profits and suspended share buybacks in the face of growing risks of a recession. Now, we all know the criticism of the buybacks, banks given huge supporting funds, and it's incredibly annoying for the taxpayer then to see them using the profits they've made since that support going into share buybacks rather than necessarily perhaps paying back the taxpayer. Nevertheless, let's continue what Jamie Dimon thinks. The chief executive also stressed the need to build capital reserves due to increasing requirements from regulators, while flagging a number of concerns, including the war in Ukraine, high inflation, and the never-before-seen quantitative tightening as threats to global economic growth. So clearly he's worried about the Fed's path of increasing interest rates. And in our weekly update, which we produced yesterday, and we put a link below, we highlight the fact that on the 27th of July, we're absolutely certain there's going to be a 0.75% rise in the Fed funds rate, if not a 1%, though our money at the moment is on 0.75. Closer to home, however, the economy continues to grow, and the job market and consumer spending remain healthy. Dimon said, even as the bank braced for potential loan losses by setting aside more money. Dimon told reporters that he still believes a storm of uncertain magnitude is coming for the economy. The risks, he said, are nearer than they were before. The potential outcome ranges from a soft landing to something much harder, he said. Overall, the results presented a grim picture for the 3 months since the US Federal Reserve started raising interest rates to tame runaway inflation, sending financial markets into a tailspin on fears of slowing growth. As far as the things that you don't want to see, you've got pretty much every one of them, Thomas Hayes, managing member at Great Hill Capital LLC in New York, said. Missing the top and bottom line, cutting the buybacks and increasing credit reserves are all things consistent with battening down the hatches for a recession, he added. JP Morgan shares slid nearly 5% as the bank recorded $1.1 billion in provision for credit losses, including a $428 million boost in loss provisions. Last year, the bank had released $3 billion from its reserves. The shares were down 4.2% in mid-afternoon. It posted a profit at $8.6 billion or $2.76 per share, missing the average analyst estimate at $2.88 per share according to Refinitiv. Other large US banks, including Citigroup and Wells Fargo, will report results this week. And interesting, we will comment on them. While Goldman Sachs and Bank of America will round out big bank earnings season next week. Down. Investment bankers fared the worst at JP Morgan, with revenue from the business sliding 61% to $1.4 billion. Rival Morgan Stanley also reported a slump in its deal-making unit. Lower fees from fewer debt and equity issuances and a $257 million markdown on its book of bridge loans also hurt the investment banking business. Banks make bridge loans to companies expecting the debt to be refinanced or sold in broader capital markets. Our bridge book, it's smaller than it was because we priced ourselves out of the market. A lot of people can lose a lot of money there, and we lost a little, Dimon told analysts on a call. Wall Street's combined book of bridge loans amounts to about $100 billion, only 20% of the size when the financial crisis struck in 2008, Chief Financial Officer Jeremy Barnum told analysts. Barnum said JP Morgan had made conscious choices to give up market share in leveraged finance to reduce risk. Analysts have been watching for losses on bridge loans, especially since the CFO of Bank of America said last month that his bank would likely record leveraged finance write-downs of as much as $150 million for the quarter. Like rivals, JP Morgan last year rode the deal-making wave and advised on several major business combinations, underwrote some of the biggest stock market flotations, and helped put together deals involving special purpose acquisition companies. Of course, we've got to bear in mind if stock market prices are falling, then the incentive for people to launch new businesses on the stock market diminishes. However, Russia's invasion of Ukraine in February and fears around an economic recession dealt a blow to merger and acquisition activity in 2022. Merger and acquisition activity in the United States also plunged 40% to $456 billion in the second quarter. JP Morgan Chief Financial Officer Jeremy Barnum said that while the bank's existing underwriting pipeline remains healthy, it may be difficult for older deals to close. Trading, however, was a bright spot, with total market revenue up 15%, with fixed income and equity trading both recording jumps. The bank's net interest income rose 19% to $15.2 billion. For the year, it expects NII, that's net interest income, excluding markets, to be more than $58 billion, up from its earlier forecast of $56 billion. Rate hikes benefit big lenders by increasing what they earn from loans, but rapid increases could slow the economy, leaving consumers to absorb higher borrowing costs, in turn slowing loan growth for banks. So it's a double-edged sword. They'll make more money on the loans that they do, but they may end up making less loans. The Fed is expected to ramp up its battle with 40-year high inflation with a dramatic 100 basis point rate hike this month after a grim inflation report on Wednesday. And of course, as we announced in our weekly update yesterday, it's about 23% likelihood of a 100 basis point rate hike this month. We ourselves think they should do it, but we're erring on the side of caution and suspect that the Fed will be a trifle more cautious. We'll wait and see. Now, we're not producing this for you to feel sorry for Jamie Dimon or his bank, or for any of the banks for that matter, but it does impact the global economy as to how the banks are viewing the future and the actions that they are taking. Clearly, JP Morgan is looking, if what they're saying is true, to actually curb perhaps some of its risk-taking ventures, which may not be quite so good for the mom-and-pop business looking to expand from their traditional roots. We'll wait and see what happens, but we wanted you to be aware of this as early as possible. Thank you so much for listening. Please, if you like this, give it a thumbs up, whether you like banks or not. Subscribe, press the bell sign, and we'll be producing a few more of these with our little comments attached as well. The one thing we would end up by saying, of course, is if the banks lose money, will Jamie Dimon's income reduce as well? Let's wait and see. We'll soon find out. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.